U.S. retail gasoline prices are falling right now. They peaked in 2024 around $3.50 per gallon, and now they're dropping down toward the $3 per gallon level. It's natural to see that kind of movement and to hear all the talk about the upcoming presidential election and to wonder, are there some election shenanigans that are happening here to drive gasoline prices down? Said differently, right? The party that's in power will typically be find some advantage from low energy prices, specifically low gasoline prices, because they impact so many people across the country. So is the incumbent party helping itself by trying to drive down gasoline prices right as we approach an election? And I want to go through that topic today, look through some data, and really get to the bottom of what's happening here. The short version is no, there are no shenanigans that are happening. Gas prices are really following almost exactly the kind of scenario we would expect them to follow when we look at data going back to 1991. And so that's what I want to do. In this first chart, we are looking at the historical range of gasoline prices from 1991 to 2024. And we see in the shaded area, the lowest gas prices get are around $2 per gallon. The highest the gas prices get are between $6 and $8 per gallon, peaking in the middle of the summertime, which is peak driving season, peak demand. So it's not surprising that we would see the highest gas prices then. Importantly, all of these prices are inflation adjusted. So we're trying to get toward an apples to apples comparison since we're looking over such a wide range of historical data, again, from 1991 to 2024. The solid line, red line in the middle of this range, is the average gas price for that week of each year from 1991 to 2024. The blue line, that's pretty much laying right on top of the pink line, is what gas prices have done so far in 2024. So already from this chart, we see that the way gas prices have moved in 2024 are pretty much exactly the way we would expect them to move given historical averages for the past 34 years. And so I want to dive just a little bit more deeply into this and figure out just how like or unlike is our 2024 gasoline price move compared to what we've seen across each of these past years. That's what we see in the second chart. What we're looking at specifically is the change in US retail gasoline prices from week 24 of that year to week 40 of that year. Why did I choose those 2 weeks? Week 24 is when we most often see peak US retail gasoline prices over this window of time. So I want to see what gas prices were that week of each year and then compare it to week 40, which is the most recent data point that we have as I wrote this post and making this video. So we see in 2024, from week 24 to week 40, gasoline prices have decreased 6.9%. The median change in gas prices from week 24 to week 40 across this window of time is minus 4.5%. So it is true that gasoline prices are down just a little bit more than the median numbers would suggest. What gets really interesting about this particular chart is we get a good sense of the variability we can experience in gasoline price movements. We can see rises of 30%, falls of nearly 30%, and almost everything in between. This chart really helps communicate just how volatile gasoline prices can be. There are so many factors that go into determining what ultimately people pay at the pump for retail gasoline that it's really tough to estimate in advance exactly how gas prices might move. So the long story short, again, version of this is that U.S. retail gasoline prices in 2024 are moving almost exactly the way historical averages would suggest. And historical averages or the historical behavior to this point would suggest almost anything is in the realm of possible when we see what's happened with gas prices in the U.S. There's just a wide range of what they could do. Having seen all of this, it is very, very difficult to imagine that any sort of federal government intervention is taking place to drive gasoline prices down. One final note is even if the US federal government were to try to intervene to drive gasoline prices down, really the lever they would pull is by releasing crude oil from the Strategic Petroleum Reserve. That makes crude oil more abundant, drives the price down of crude oil. That would ostensibly carry through the refining apparatus and would ultimately make gasoline prices lower on the back end of it. And for the past 41 weeks, we've actually seen week on week additions to the Strategic Petroleum Reserve. So not only is the federal government not withdrawing crude oil from the SPR, they're actually adding crude every single week back to the SPR. A couple of years ago, we did see big withdrawals from the SPR when inflation was spiking, when gasoline prices, all energy prices were moving along with it. We saw substantial withdrawals from the SPR. We've not seen that recently. And again, in fact, the federal government's been adding back crude oil to the petroleum reserve, which, if anything, is increasing the price of crude oil. It's increasing the price of gasoline. And so it'd be the opposite scenario that folks might imagine if they're thinking the federal government is trying to intervene in gasoline prices to impact this upcoming federal election. So that's the story. The data tells us these movements are exactly what we should expect. No wackiness going on. This is just the nature of energy markets. Thanks so much for watching. Subscribe if you liked it. We will talk soon.